Good morning, everyone, and welcome to today's morning report on Monday, the 1st of September, with me, Richard Perry, market analyst at Handtech Markets. This European trading session has again started fairly mixed, fairly cautious. There's a lot going on that's happened over the weekend. A lot of geopolitical talk about sanctions over into Russia. And these markets have just begun the week on a fairly cautious note on the back of that. There's no US trading today. It's Labor Day in the States, so there's no real steer from the States. But now, just early in the morning, we've got all the European PMIs that are coming out, and we're getting a bit of a mixed message still. Italy, Spain, and have both missed estimates, and France has just slightly beaten expectations, but certainly it looks like a mixed bag for the Eurozone at the moment, what we're seeing. In terms of currencies, this dollar is fairly mixed as well. No major moves, although the sterling has had a bit of a strengthening in the early European session, and that is certainly looks like the sterling is trying to break out on the upside. But what we've also seen is the commodity currencies as well faring fairly strongly, and that has come after the Chinese PMI data. That Chinese PMI data slightly missed expectations today, but certainly the HSBC private PMI for the small businesses staying above 50 is a positive there, and that also has driven some of that moves today. Now, in terms of my chart of the day, I'm looking at silver today, and that sort of ties in with some of this geopolitical tensions that we've seen, but silver still has continued to fall away in the past 7 weeks. Continuous series of lower highs, lower lows throughout this chart on silver. The latest low comes in at 1925. And it looked like last week that there was the beginning of a possible rally, but that was sharply retraced, and it didn't even break the reaction high of the previous reaction back in the beginning of August. So it just continues to remain on this downside downtrend, and it's flanked by this 21-day moving average as well. So it still seems fairly negative. It still seems as though all these momentum indicators are fairly negative configuration certainly on the RSI. The stochastics have picked up slightly, but it just looks like with them tailing off again, that it's just another element of this negative configuration here. You'll see on the intraday chart here that if you zoom out, you'll see the continuous stepping of the lower where the support becomes the new resistance. Although you did have that slight spike higher, I think you'll still see that 1970 old support is the new resistance there, and also 1950 as well. So between there's a 20 cent resistance band that I think is now containing all these rallies. Now the pressure looks to be building once again to the downside. This is on the hourly chart, slight consolidation latterly in the last day and a half maybe, but it certainly looks like it's just building once again for the next leg lower, and that seems to be the theme of this chart. Consolidation that subsequently just falls away once again. You'd say below that 1925, that reopens the downside probably towards that key May low of 1860, but then there is a minor low you could talk about around about 1894, 1895, so maybe that is the next support. But certainly it looks like the rallies are being sold into on silver, and further downside is going to be seen in due course. Anyway, I wish you good luck in your trading on silver today, and I will speak to you later. Thank you.